MVST has turned into a high-volatility EV battery player with a massive 52-week move and big retail attention, perfect for a quick, balanced breakdown. This video covers what Microvast does, the core numbers, the bull and bear cases, and what to watch next. Kept super simple for first-time viewers. Market cap sits in the mid-hundreds of millions, with 323.67 million shares outstanding. So this is a smaller cap name with meaningful liquidity. Trailing 12-month revenue is $422.61 million with a net loss of negative $113.34 million, and EPS is negative 0.35. So top line is sizable, but profits aren't there yet. There's no dividend, and the stock carries a high beta, meaning price swings are bigger than the market. Microvast designs and manufactures lithium-ion battery technologies and components serving EVs and energy storage, including multiple cell chemistries and vertically integrated parts like cathodes, anodes, electrolytes, and separators. That positions the company in key electrification markets, but also places it in a fiercely competitive and capital-intensive industry. 422.61 million TTM shows real customer demand, and gross margin is a solid 35.46%, indicating improving unit economics versus early-stage peers. Operating income is positive at $32.22 million, and EBITDA is $64.22 million, a sign the core business is moving toward healthier fundamentals. Insiders own 27.72%, with a public float of 193.53 million shares, suggesting meaningful skin in the game and a constrained tradable supply. Free cash flow is positive at $25.25 million. FCF margin 5.98%, which helps fund operations without solely relying on new capital. One analyst lists a strong buy with a $6 target, implying sizable upside from recent levels. Still unprofitable. Net loss is negative $113.34 million, and EPS is negative 0.35. So profitability remains a work in progress despite revenue scale. Tight liquidity. Current ratio is 0.83 and working capital is negative $90.07 which can strain day-to-day operations if not improved. Leverage risk. Net cash is negative $303.56 million, with total debt of $403.28 million and debt equity at 1.13, increasing sensitivity to rates and refinancing. Efficiency gap. ROE is negative 27.17%, while ROIC is just 2.77%, showing returns on capital are not yet compelling. Sentiment overhang. Short interest is 31.38 million shares, about 9.69%. Of shares out, 16.21% of float. And beta is approximately 3, so swings can be violent both ways. Traditional PE is not meaningful due to losses, so look at revenue and cash flow-based multiples. If margins expand and cash flow scales, these multiples can compress quickly. If not, they can look full for a still unprofitable name. MVST has posted a very large 52-week gain, but also trades with a 52-week range of roughly $0.15 to $4.72, underscoring how quickly it can move. High beta and notable short interest make it vulnerable to sharp rallies and fast drawdowns, so position sizing and risk controls matter. Average volume and a sizable float mean it's tradable, but liquidity can thin out on extreme days. The last reported earnings date was 11th, 2025. Keep an eye on the company newsroom and filings for the next update and guidance. Earnings and backlog updates tend to be the biggest catalysts for the stock. What to watch next? Can gross margin stay mid-30s, and can operating margin hold or improve while scaling revenue? Watch current ratio, working capital, and any moves to bolster cash or refinance debt at reasonable terms. Is positive FCF sustainable quarter after quarter? And does it grow alongside EBITDA? If this helped, consider subscribing for more clear numbers-first breakdowns of small and mid-cap innovators in the EV and energy space. This video is for education only and is not financial advice. Always do independent research and consider consulting a licensed professional. MVST is a high-beta battery maker with real revenue and improving unit economics, but balance sheet tightness, losses, and heavy short interest keep it firmly in prove-it territory for now.